I want to bring in our guest this morning down on the floor of the exchange. We've got Frank Lesh from FuturePath Trading. Frank, let's talk about that auction. What's the outlook? Has the government wasted that bullet? Do they really need to do it?
Well, as of this point, we don't know the answer to that question yet, but the markets certainly like the fact that we've got QE2 ongoing. And whether or not there's more to that, we'll find out in about the next 6 months. But I think the markets wouldn't be where we are now had we not seen the Fed taken this action that they have.
Well, we've seen a huge move in yields, both on the 2-year and the 10-year. Of course, hopefully, if you were getting a mortgage, you got it a month ago. They've moved up half a percent. So what's the outlook from your point of view and from the guys on the floor at this point for the next month on rates?
Well, at this point, we're looking for a test probably back up to the high rates we've seen up into the 3.5s or so, basis this 10-year note. And into next year, it certainly wouldn't be a surprise to see us move up to 4%. Certainly up to that level if we see the Chinese continue to move up. I think our rates would move up with theirs as well. But as your guest previously was stating, right now the markets are showing their displeasure and about the inaction of our government and what we're doing about our debt problems in here. So as the longer we go on without any action by our governments here and in Europe to deal with these problems, we expect to see rates move up in lieu of that.
So in other words, Frank, from your point of view and the guys down on the floor, China's doing the right thing. We, by spending more, spending money we don't have, we're doing the wrong thing?
Indeed, at this point, that is the message that the markets are telling us. Now, of course, we don't see this reflected in the equity side, and when you look at the rates here at 3.5, it's not that onerous, it's just what may come to be. But at 3.5 here, we could easily see equities advance further. I think a move up to 4%, and then the equities would start to be worried about that.
Okay, Frank Lesh, thank you for joining us from the floor of the CME.